everybody. Welcome to the weekly market wrap-up here at verifiedinvesting.com. Of course, I'm Gareth Soloway here to guide you through what happened this week, but also looking forward to next week. What are the trade setups? What are the levels? What is the market telling us from a data-driven perspective? All right, so first and foremost, we got the jobs data this morning. The jobs data coming in stronger than expected. Good news is good news because everyone's been worried we are heading towards a recession. However, there are key metrics that are telling us not to believe that all of a sudden everything is okay. Mainly copper and oil, both very weak today, considering such a good jobs report. All right, and those are key factors in analyzing the growth of the global economy and domestic economy here at home. All right, so number one, market's up again today. I believe it was the 7th or 8th day up in a row for the market. So it's been a tremendous continued grind higher. But again, we did fill a major gap on the S&P. In technical analysis, gap fills are resistance levels when you rally to the upside going into a gap. We'll talk about that in just one second. Follow me over to the big board over here. Let's take a look at where things are. The Dow Jones Industrial Average up 650 points. So beautiful move there. NASDAQ up 275 points. S&P up 100. So you can just basically see 1.5 to 1.8% gains really across the board on the indices on the back of this jobs data. Now listen, it wasn't just the jobs data. Overnight, the markets were down on Apple and Amazon earnings. And then what happened? The Chinese came out and said the door was open for discussions on trade, and that really kickstarted the futures overnight to the upside, and then the jobs data helped. All right, take a look. This is what I'm talking about right here. Oil is down. Now, it's only down about 0.75% or 45 cents. But when you get good data on the economy and people supposedly are breathing a sigh of relief that the economy is not spinning into recession, why is oil not going up? And that's something that we have to monitor very closely. In fact, if you've been following the game plans, you know that oil has broken down from a major support at $65 per barrel and unfortunately is likely going a lot lower. In addition, we have gold today really not doing much. So again, you know, you're not seeing a lot of selling in gold. When you think about it, right, gold is a safe haven asset. So in theory, if it's risk on and we're seeing stocks rip higher, technology going higher across the board, you would think that there'd be more selling in gold. In fact, that's not happening. Gold is only down about $5. Now, I still think there is a little bit more downside in gold to about 31.50, 31.40, but then it actually starts to become a buy again at technical support. Bitcoin having a little bit of a pop today. Nothing too crazy here on Bitcoin, up about $400. It is above a key level, but this is important, folks. We've broken above 96,000. We have not confirmed the breakout yet. And unless we rally significantly into the end of Bitcoin's day, you will not see confirmation of that breakout, which means you still have to be a little cautious here on Bitcoin. Looking over at the S&P 500, this is really what I want to talk to you guys about. So we're up about 1.5% on the S&P. Great day. But again, this was a key level that I've talked about for weeks as being an upside target for myself when looking at the markets. It was right above or right below 5,700 on the S&P. In fact, I think even last weekly market wrap, I wrote 5,700 on the board, right? And we said, all right, guys, look for the markets to continue to go up into this level. Well, guess what? We've done it now. We've even pierced this level. But this is the first point now where, in my opinion, you're starting to see a big test on a technical basis of the bullish side of things, the bulls versus the bears. Okay, who's going to win? Is it going to continue to blast up, or is it going to get rejected here and start to head back down? Interestingly enough, this is right around a 618 Fibonacci retrace from the all-time high up here to the recent lows. And again, so you have multiple levels that aren't exactly in line, but very, very close right in this vicinity. And that's what I mean by, on a technical basis, this tells us we're likely going to see a big move one way or the other. It's either going to be a breakout and we're just going to continue to rip higher, or we're actually going to see the technicals take over and telling us the markets are going to pull back. The other thing to keep in mind too here, folks, is that we were just talking about this on the trading floor today, how, you know, if you go back 2-3 weeks, every Friday we were panicking, not panicking as traders, obviously, but more looking at the global picture of investors and saying, wow, no one wants to hold this market into the weekend. You know, there's so many risks. People are panicking. They're so fearful. And then you look 3 weeks later to today, which is a Friday, and it's almost the opposite. everything's rallying up into the end of the day. Stocks are ripping higher. And so there's this real meteoric shift. And what I always tell people is the psychology of trading is number one, right? And so generally, when we were down here and everyone was panicking and saying, oh my goodness, things are going to go south, was that a time to buy or sell? And the answer was obviously it was a time to buy. When everyone was panicking and not want to hold over into a weekend and into Monday, that was actually the time to buy. Well, now you have the opposite. Now the bulls have retaken control and everyone's saying, oh, let's buy and let's just buy everything. Buy no matter what. Rigetti's rallying again. I mean, all these stocks that kind of had been left for dead now are getting pumped again because the bulls and the risk-on traders are pumping money in. But what do we know about the inverse factors of psychology? If this down here was actually the time to buy, now you're seeing the opposite up here. Is it alerting us that there might be an opportunity on the downside here? So again, as bullish as I was following this flagpole, we called this a flagpole, right? You saw the consolidation here and then the breakup. Well, now I'm flipping over and I'm definitely more bearish. In fact, today in smart money stocks and ETFs, I was pretty aggressive in shorting things. All right. Now, again, I still have lots of maneuverability. I have lots of cash on the sidelines to deploy, but I would definitely say I took profits on Google, on Amazon today, on my longs, and now I've flipped it into a lot of shorts in different names because we're into the technical levels. All right. It's not an emotional decision. Should never be when you're investing emotional. It should be technically based, right? All right, so let's go back to the computer here and take a look at a few other charts. We obviously have the S&P 500, so let's flip over to the charts now. And what we can see here on the 10-year is rallying today. So that's number one. The chart was telling us that it was at support, so it was likely going to go up. But what's interesting here, it's not rallying, in my opinion, because you're necessarily seeing other countries not wanting to buy our debt. But this is more to do with a little bit of relief that, again, you know, basically the safe haven of treasuries is not needed. So they're selling in treasuries, which pushes yields to the upside. The question is, does that continue and for what reason? The dollar basically flat on the day. We've obviously seen a big breakdown in the US dollar below this trend line. I still think we could rally up on the dollar back to this level before the next leg down. Names like Apple obviously reporting earnings. We can see again it was down on the day. So in spite of the big rally on the NASDAQ, Apple was a laggard today, down about 3.75%. And then on the other side, you had NVIDIA, which really, what's amazing about NVIDIA, folks, is that it's kind of become the black sheep of the big cap tech, right? So if you look at this, yeah, it's bounced off of the lows, but comparatively, it has not bounced that much. And I find that very fascinating as it's almost become the odd man out with a lot of these other stocks. Like you can look at other stocks. Palantir's another one of them that's just had an incredible run. I mean, look at this chart. This stock is up literally 83% from the low on April 7th, 83%. And it's basically double topping right up here. But if you look at NVIDIA, which used to be the favored play, that's barely off of its lows. And I actually still think NVIDIA is going to ultimately break down and go a lot lower. So again, just lots of things to kind of keep in mind here in terms of charts, in terms of understanding human psychology. If we bring the camera back on me here, we can understand that, again, folks, we have to think about it in terms of kind of being aware of human psychology. How bullish are people getting? Are they overcompensating on the bullish side like they were on the bearish side? And then combine that with charts while ignoring the hype, right? This weekend, you're going to see lots of people on social media, on the mainstream media networks. They're going to be talking about how, oh, it's a new bull market. Here we go, all-time highs, et cetera, et cetera. You got to be able to filter that out and say, all right, let's look at the charts. What are the charts telling us? And what is going opposite the crowd at extremes also telling us? All right, let's go to Bitcoin on the charts here. Bitcoin here, we have it. So this was that parallel we've been watching here. Amazing parallel because, again, for those of you that don't know, this parallel was found by taking the high of 2017, connecting it to the exact high from 2021, and it literally connected to the exact two highs in 2024 and then 2025. And essentially, you drop that parallel down, and you could see that all of this chop kind of was finessing right at that level before we broke down, and now we're back up into it. But if we go to the daily chart, while yesterday arguably closed above that line, to confirm we need to close above that high from yesterday. That doesn't appear to be happening. So listen, it still could be. It still could be a breakout here. I am just going to remain and wait until the charts tell me it is before I decide, okay, now it's legit, right? So listen, human emotion, we always want to jump to conclusions. We want to say, oh, it's got to be a breakout, so we got to go long, or it's got to be a failure of support, so we got to go short. But in reality, you got to let the charts tell us. That's the only way we can stay essentially agnostic or neutral on our decision making, is not jump the gun. We might think, oh, jumping the gun gets us a lead, but oftentimes it actually gets us a loss. And that's something I've experienced many times over in my trading career, and probably will going forward as well. All right, gold. Let's go back to the charts here. Gold flat to negative. Last Friday, if you recall, guys, this was Friday right here. We had said, okay, topping tail right at the parallel. And just to show you guys this cool parallel again, it's a beauty. So the lows right through here going back to 2018 to the lows of 2022, and then a perfect parallel. Look at this. Here's your line. Stretch that parallel right up to the high of 2011, and it literally gave us our top. And this is why I was short gold basically last week when I did this same market wrap. I said, guys, I'm short gold. And today, granted, as of the last couple of days, I've covered a majority of that. I still have a little out there. But if we go to the daily chart, we could see the bear flag, and then the breakdown, and then I think we go here. This is kind of the easy, my guess is this is where it easily gets to. You have to be aware that we could also head a little bit lower to this line, but look at how those two lines are getting very close. So we're just connecting these lows through this line here. So right somewhere between 3150 and 3100, that's going to be where the big support on gold is going to be. Silver. Now, silver, like I've said to you guys before, it hasn't been amazing in terms of a trading environment. If you look at silver, right, if we go back to 2024, basically 1 year ago, this is May 2024. I mean, look, up, down, up, down, up, down, up, and then now we're coming in again. I mean, it's really been a whole lot of chop. That's really the essence of it, versus gold that has been soaring to the upside. But needless to say, short term, you have a support level here, which we are now attacking again. If this breaks, we honestly could see silver go all the way back to about 28.80. If this holds, you still have a possibility of attacking that 34.50 level, and then we can obviously see if it breaks out. Going to oil, last week we talked about the bear flag. Well, the bear flag broke down. Very classic technical analysis. Your downward move, inside bar flag, and sure enough, once it broke here, it was down, down, down. Now, remember, I talked about this just at the intro about how oil and copper are not confirming this robust economy that the market was rallying on today. So I'm calling BS on the rally today. I actually still think, like I said earlier, that we're going to fall back down in the markets. But the main reason is yesterday we got the Truth Social post by Trump saying, you know, anyone who trades and buys oil from Iran won't be able to trade with the U.S. So you got a little bit of a bounce there. That was after 3 down days. So it was kind of due. But then look, today, supposedly on this great jobs data, oil is actually down. And that's telling us something. And then if we go to copper, same kind of deal. Copper was up slightly today, but still, you know, look at how weak, again, just small bounce on copper today, nothing major, versus if it's really a robust U.S. economy, we should be soaring to the upside on copper and at least be negating this red candle here. And it's not. In fact, it's starting to put in a bear flag potentially for another leg lower. All right, lastly, natural gas. Natural gas surging through this little resistance area after it attacked it a couple days in a row. I do have a short level right around 380, pivot low here, right through here, that I'm going to be eyeing for a potential short on Monday as a swing trade on natural gas. All right, so listen, it was a wild week. Earnings from the mega caps, right? We saw good earnings from Meta, Microsoft, and then bad earnings. Well, I wouldn't call them bad earnings, but just not up to snuff on Amazon and Apple. Next week, we will have more earnings, but again, the big players have mainly reported. There will be some interesting ones next week. The key is going to be going forward with the economic data, comments from Trump, any trade deals, all of this stuff. That's going to be what the markets are going to focus on. I would encourage people to understand there's going to be a lot of volatility going forward because there's so many different moving parts here between trade wars, between economic inflation data, and then earnings, and even more. And we also have a Fed decision next week. Now, they're not expected to do anything, but the guidance from the Fed will be unbelievably important. So I will be here guiding you guys. The whole team will be here guiding you through the technicals, no emotion, no nonsense, no narratives, just what is the data telling us. I'll be here for you, just like all of Verified Investing. Thank you guys for tuning in. Now go have a great weekend. Take care.